Hey friends, I'm Josh. Let's get started with talking about the markets in the week ahead and what happened last week and how we can position ourselves to look for some playbook opportunities as we're looking to express that specifically within the future space. So we're going to start here with the quick sheet. So this is a tool that's available to you free. I make this available every day as part of a daily outlook. And this is the first place that I go to kind of get some ideas or where some potential playbook trades would be in play, even if it's not typically my kind of core products, which are NASDAQ, ES, Russell, and crude. This is where I can look and see, is there anything else of interest that might be out there? So we are going to start with the equities and see where we are from there. First thing that I note, and the first place that I start, is to look at the posture of the product. There's about 9 postures that auctions exhibit, and they're in repeating fashion, meaning that you can use those over and over again. One of the things that I pay attention to is if these are in agreement within an asset class, and right now they're not. We can see that the NASDAQ is doing better than the others. So let's just take a look at what that looks like over the last week. You can see the NASDAQ has outperformed the ES and the Russell. Not a surprise here. It's been driven again by semiconductors and tech, with some consumer discretionary, a little bit of retail in play as well. NVIDIA, Tesla, AMD, all the usual specs still in play. And this is post OPEX. Last week was OPEX, CPI. We're north of those prices. So the auction is continuing to do well and survive that. We're also burning off a lot of hedges that came into play in the last couple weeks. So there was some weakness, some rather unseasonal weakness that came into play, largely because of an unwinding of a carry trade, which is a spread between the dollar yen. So investors were borrowing yen, converting that to dollars, investing with US dollars. The BOJ raises the rates, people have to cover the trade, and that gets us lower prices because you got to sell stocks to do that. It was a little scary. That's what this TDEX here, what that means is that you had investors who were going outside of the money in their hedges and when people go OTM on the hedges, that typically means they don't know how far this can go. However, we went from like massive complacency in the curve where this is real spread to maximum fear in very short order. And the cure for falling markets is to see people get really afraid. That fear got us to tag a key VWAP for the year, and then now this is the reflective action higher. I was looking for potentially for us to fail around the 550 area. We are pushing right back where the last significant sellers came in. We now got to have our eyes on new all-time highs in the S&P at least. So given the fact that we're heading into kind of 2 of the least participated weeks of the year in terms of volume, the drift is going to be on. Okay, so as we continue to burn off all this and get further complacent, look for us to continue to burn or to trade sideways. So sideways to higher is on tap for this week, especially given the catalysts that are around. The only caveat to that is that we are post OPEX. So now that we're post OPEX, it could actually free the market to move a little bit more. So be mindful of that. So if we see some more movement to the downside, that's likely post OPEX induced. Okay. Now going back and just looking at what we're looking for as far as the products, when you see on the quick sheet that these are red and the expected ranges, that means that the implied volatility is going lower. We're looking for smaller ranges for the day, still within the monthly and monthly expected highs and lows, so nothing really out of school there, but above the most traded price of the last week across the board in equities. Kind of starting to stretch it on a monthly VWAP basis for the NASDAQ. So be mindful of that as we keep pushing higher. We're actually below those prices for, we're pushing it on the NASDAQ, but not too extreme in the others. All right, so let's actually look at the charts and see what we're thinking as far as we come into the week as we look at NASDAQ, which is kind of my bread and butter and where I like to spend. Okay, for the month, back to the beginning of the month, looking to make new monthly highs from a posture standpoint here. So here's the price, and here's the 5-day, and here's the 20-day inventory. So we traded all the way back up, brought the 20-day down, and balanced. Okay, so now that's what gave fuel for the auction to push at the end of last week. What's a likely destination is 20K. Okay, so that's essentially our upside idea is 20K, all things being equal. We look at this on a weekly basis. We can see that we did not pull the 5-day higher, but we've got a node around 19,600 that is going to be the key early focus of the week. As long as we don't really get significant movement back in this direction, look for us to balance in this area before making a push, or push up there and then come back to this area, or we could just push up here and just stall. Okay. From an expected range on the quick sheet, we're looking for 20,000 to the upside and 19,200 to the downside. So that's the playground that we're looking to play with. Look at 19,600 to be your key pivot. Okay. And then as far as looking at Monday, what we're looking for there. So we had a trend day here and we had a normal day here. A couple things that played exactly as you'd expect. On Friday was OPEX, but we did still get a prior value test. What does that mean? That means within the day after a trend, if you open inside of the range and you're above halfway back, you're looking for a tag of the point of control. The auction does this to try to accept that inventory. So that was an early long there. There was an IB go with long also to get new RTH highs and start pushing toward the overnight high. Didn't quite get there. In fact, the afternoon trade was completely stuck inside of the lunch trade. So very balanced to close the week. What does that mean for Monday? We're looking for higher prices up toward about 19,200 would be, if we look at the expected range and projecting that out, we could dip a little bit lower and modify that a bit. Given that this was balanced, don't be surprised to see trending activity on Monday to either side, given that this is the key pivot, is this 19,600 area. That's the key pivot. So we're looking for early, if we're above it, look for an early tag of the point of control, 19,600, and then an attempt to new RTH highs could trend toward 19,800. If they fail below 600, could test down towards 450 and then back, still making new highs below 450, and this becomes open. Okay, so that's what we're looking for in the NASDAQ. Any other thing that I'm looking for this week? It's a very light participation week. We're really light on economic releases. We do have FOMC minutes on Wednesday, and we have Powell speaking on Friday. But then next week is the real significant one where we've got NVIDIA earnings, and then we also have the Jackson Hole Symposium before we lead into the Labor Day weekend, okay, in the end of the month. So again, be very careful in this week because it is, again, expected to be pretty light in the participation, just noted by the fact of how much time we spent below the 30-day relative volume over the last week. So participation is waning. And what does that mean? That means that pricing get pushed pretty fast, pretty quickly, but yet not negate the key idea of where you're looking to go. So just be aware of that. This is the time frame that I spend most of the time looking at. This is how I'm identifying playbook setups. And then I go to a smaller time frame when I'm looking to establish risk around that. Think of this, if you ever played sports, looking at the profile is like looking at somebody's hips. If you're trying to guard someone, the hips don't lie. You can get lots of head fakes, but stay focused on the hips and you'll be all right. Okay. And that's it for this week. I'll be back later today with outlook for Tuesday, and I hope you all stay safe and mind your risk while you're looking for those playbook trades. If you're not getting the quick sheet and the daily outlook, you can sign up on the link to this video, and feel free to reply to this post if there are comments or questions that come up as you're looking to find your way in markets. All right. Peace.